day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, the 22nd of August, 2019, about 3:20 p.m. Central Daylight Time. This will be the settlement prices in all the stock indices. Yes, the market stopped trading just now. It'll reopen at 3:30, trade the 4, but the settlement's already been determined, and that's where you're at on them. So we had a pretty wild day every which way, but why? Well, the real reason is tomorrow we're all waiting to see Fed Chair Powell's speech, and I think it's at I'm giving a guess. I think it's at 10 Eastern, 9 Central. Don't hold me to that, but that's what I think it is. And we're looking to see if he holds the line from what he did in July when he said the rate cut is not the beginning of a cycle. Is there more to it? We saw 3 Fed members come out today, and they were not in favor of further cuts, but they're known not to be in favor of cuts. So I don't want to add fuel to that fire. But the market waiting, metal markets waiting, the dollar index down along with the euro. I don't think you can count today as one thing or the other. I think it's understanding that we're waiting to see, is there a policy shift, change? It's the same from Mr. Powell. The British pound up, and I mentioned yesterday the fact that Mr. Johnson had even gotten a blink, just like that, from Miss Merkel of Germany, where maybe another 30 days for him to present something. Well, that set the stage for the meeting between Mr. Johnson and Mr. Macron today, but it doesn't matter. The doorway opened a little, and we'll see what happens. Where the real fireworks happen in the Brits is going to be in 2 weeks when Parliament resumes, comes back from its summer break. Energy prices under some pressure, a mixed day in the grain markets, bonds and notes. Well, while I was on Fox today at about 2:10 in the afternoon, you were totally flat in the curve yield, the 2 and the 10. And I realized people are making a lot to do out of this, but keep in the back of your mind, foreign money keeps coming here. A curve inversion is not for 2 hours. Generally speaking, it means that it's gone on for a period of time, not 2 hours and not 1 minute during the day. Please keep that in the back of your mind. So when we go to the S&P, you can see the market has fought a battle and still fighting a battle at this 18-week moving average of 29.21. Guess where we finished today? 29.21.75. The 18-day average, 29.21. I mean, battleground is very clear. I call that the line in the sand. Remember, this is a chart of closing prices only. When we take a look at the daily bar chart, the market did lift its head up today back into these old resistance points and couldn't get through them and settled back down. In the process, the swing line did turn up. You have a pattern now of higher lows and certainly a higher high. So the trend is up. What breaks the trend is taking out the low of yesterday, and that number is 28.93. So that would be the risk associated with the market. What I always like to know is where the key moving average is, and you tell me where you're fighting a battle. First, you got the 18-day average under the 100. It was a bearish crossover today. Second, the market did not close under the 18-day average. It closed over both. So it sort of nullifies that. If you take out this 28.93, what that could do is keep the 18 under the 100, and crossover artists, people that follow that, will say, but better watch out now. You could get more of a correction, and I wouldn't be surprised at that point that they talk. I'm not saying it's going there, the 200-day average again. On the other hand, where's the Bollinger Bands? Pretty far away. They're down here, very close to the 200-day and way up there. In plain English, when I look at momentum, I see an overbought market that is basically trying to be neutral against these key moving averages, awaiting an important report from Mr. Powell tomorrow, and that's where I think you're stuck. I think you have to wait, see how the market wants to respond, and remember, as he's talking, the algorithm, they're going to take off, and this market's going to be God knows where. When you take a look at the NASDAQ, at least the chart's a little cleaner. You are overbought, that's number one. You do have the pattern of higher lows and higher highs. That's bullish. You're over the 18-day average. That's bullish. What's the number the bears want to get through? Right here, yesterday's low to break that pattern, which is 76.52 1/4. What's the number the bulls don't want to get under? 76.52 1/4. Now, if the market sees a bullish piece of news, wherever this upper Bollinger Band is, and it's falling right now, that will be a potential resistance point. Take out that 76.52, and just like in the S&P, you got to go back to the drawing board. What's going to happen? When you come to the Dow, the market went up to the 100-day average. Now, just yesterday we were saying, here's an outside day up. The market went to the 18-day average. Next resistance point, the 100-day. You got to that 100. You set the market into an uptrend, higher lows, higher highs. What you don't want to take out is yesterday's low. That number's 25,872. On the other hand, you got to get through this resistance to get something going, and you're already in overbought territory. When you come to the Russell, this is the one index that's not overbought. It is a market that threw out today a bullish signal because you've got higher lows, higher highs, but, where's the settlement? 1506.60 is under the 18-day average. Therefore, that bullish signal gets nullified. You've got momentum up, bias down, swing line up, layers of resistance starting at the 18, the 200, and the 100-day average of closes. I'm going to repeat what I just said. These markets are gearing on what Mr. Powell's speech says tomorrow. Going to be very, very important. What he says, how he says it, and I don't know if there's any questions and answers to come afterwards or interviews, but that'll be important throughout the day too. When we come to the VIX, you have been trendless. You've had a higher high, lower low. You had a swoop to the downside. Resistance is back at 1844, but the volatility stepped out of the market for the time being, which makes sense. Nobody knows what's happening tomorrow. In the bond market, you held on today, didn't get under the previous break lows, but we still have a pattern where you lost the bullish embedded reading. Now, you lost that reading when? Not yesterday, today. And I was pointing out to you yesterday that could happen. The only time it can recover it is the day after it's lost. In this case, it's going to be Friday. That is if you had a big up in the market tomorrow, you could re-embed the stochastic, and while momentum stepped out, it was just, if you will, for one day and you re-embed. Keep it unembedded again tomorrow. Whole different game plan. Then you put the 18-day average and price as an objective for each other. In the 10-year notes, let's go back to yesterday's action. You lost the embedded reading. You see the 78 reading? It's under the 80. If I go days before that, you can see they were both over the 80 level. So when you lose it, the only time you can get it back is the very next day, and it did not do it. So this market, whether it hits it or not, is throwing out a big warning sign that price and the 18-day average are going to make a run at each other. In TLT, you lost it yesterday too. You didn't regain it today. So I'm going to argue that those two are still in line for each other. Can this all change on a heartbeat depending on what Mr. Powell says? Absolutely. But I think the smart, quote-unquote, money stepped out of some markets today, and that's why you see that momentum slipping down. I think they're going to the sideline. In the dollar index, you've now turned the swing line down. You have the pattern of lower highs and a lower low. At the same time, momentum, while it is overbought, is still pointing up, and the bias is up. Again, a market that wouldn't surprise me. Traders took money off the table. I don't even know if they'll put that money back to work until Labor Day. I'm wondering what's going to happen with that. And the reason I say it is, at the same time, the eurocurrency got hit pretty good today. Look at that big decline. Normally, if the dollar's down, the euro's steady to higher. You're getting them both down at this point. You're put into play the 110.61. The reason? The market is looking to see what Mr. Draghi's going to say. He'll be speaking. There's others. And I think the market is betting that they're going to put out the bazooka, as I call it. They're going to put out everything. What's Mr. Draghi got to lose? He's stepping down anyways. His term ends. He doesn't even get to step. Just his term ends. And he can go out on a high note that he did something big. I happen to think that he has been behind the curve, not in front of it, just about all his tenure. In the British pound, you got back up. Now, again, Miss Merkel gave the blink. I'm doing that. For Mr. Johnson, you went up to the upper Bollinger Band and ran into your resistance. You didn't run anywhere big yet, but the market's out of its downtrend and into a resistance area and in an uptrend, while the Japanese yen, remember the fear we had up here 2 weeks ago, has worked back to a market that's pretty neutral against the 18-day average. The settlement's going to be around 94.11 and a half. Look at the 18-day average, 94.11 and a tenth, right on it. Bitcoin. Will the market find support here? That's the question. You're already oversold. So I think this correction, yeah, it could drop to the Bollinger Band, but do I see a big break from here? I don't think so, based on the fact you're already in oversold territory in this market. Any reading under 30 is oversold. In Brent versus WTI crude, as I said, I'm wondering if 3.5, 360 is too cheap in the differential. Market got up and it's hanging here at 450 right now. And as you can see in the pattern, it doesn't look like it, but it is. You have lower highs. You've got a lower low right here. You went back into a downtrend today because you're closing under the 18-day average or right on it. Now, I don't have the settlement yet. The last tick is 59.95. 18-day average, 59.96. We can say neutral to bearish. How's that? Unless you take out yesterday's high way up here at 61.41, and that was Brent. In WTI crude, it's different. You have an uptrend, higher lows, certainly the higher highs, and you're hanging right here, slightly over that 18-day average. So the trend is still up. Unfortunately, the market is a bit overbought at this point. In gasoline, I start looking at this time of the year for less demand and falling gas prices on a seasonal basis. The summer driving season is over come September 2nd. Now, whether people still go on vacation, that's fine, but as I was walking to work this morning, and I do a lot of walking, I noticed that the kids were registering for school already. So here we are, August 22nd, and in Chicago, registration's begun. Kids are back in school, I think, next week. But you can see how you're stalled right there. Natural gas, lower highs, but higher lows. I'd be careful here. Remember what I said, you're getting now to that funny period of time where summer heat goes away. You're not really going to have a need for turning on the heat just yet, although I got in my email box from my heating company, it's time to do the tune-up early on the furnaces. But that's where you're at, and you're starting to just drift sideways as the market tries to figure out what next. One of the things I want to remind you about is Linn Associates research. We're commodity brokers that write for you, commodity traders. And we write with the bent on the futures markets, the options on futures markets, and all these different categories. And we send it in two ways to you. Number one, if you have one of our trading platforms, it's in there. Number two, by email. Number three, you don't have to sign up for all these categories. You can sign up for the ones that you want information on, and I think you'll see that it's pretty interesting information written again for the commodity market people. So how do you get access to it if you haven't had it before? It's really simple. Call my staff, 866-973-2077. Go to our website. You can even click up here if you're watching me on YouTube. It'll take you right there. If you go to the website on your own, you'll see our free offers link. Click it, and everything's right there. You see it's a new way to sign up. Very simple, very easy to work with. I'm Ira Epstein. You have a great day. I'm going to be glued to the speech tomorrow morning, and I'm going to buckle in because I know the algorithm traders are going to take over the trading. You have a good day.